Quite a shock from the Bank of Japan. No great surprise, or off about 2% for the yen.
Yeah, I mean, no, it was impressive. You know, we've become accustomed to the Bank of Japan underwhelming us. I got to admit, that's what we anticipated as well today. But they've come in with some big steps. You know, the monetary base, the expansion is big. They're going to double their holdings of JGBs. They're going to be out buying risky assets. You know, there's a lot of elements that I think, okay, the market expected some of these initiatives, but not the kind of scale that they've delivered. So yeah, no, absolutely justified.
Is it going to do the trick? They got 2 years. Well, they set themselves 2 years.
Well, look, they've increased the chance that they succeed, but I still think ultimately what we may end up with in Japan is a stagflation type environment. Weaker yen, perhaps short term, gets inflation higher, but what you want is wages growth, real underlying demand. I'm not sure that this gets us there. I think that's where the scepticism will begin to emerge again in the coming months, I suspect.
Got to mention it. It makes your 80-year-end call look very challenging, to say the least, Daria.
Yeah, I mean, I think it does, because we expected them to underwhelm. They haven't underwhelmed, and I think what we move to now is really goes to your earlier question: do they succeed? And we think if they don't succeed, then a lot of what we've built into this yen will begin to reverse.
Okay, so a dovish surprise from the Bank of Japan. Are we going to get similar surprises from the ECB, Bank of England? Is that how the market is setting itself up?
I suspect that, yeah. It feels that, if you like, if the market's flirting with anything, it's with that kind of idea. We've had softer numbers in Europe. Does that mean we get a rate cut? I mean, I suspect not, but that's going to how you're going to be positioned for that probability. Yeah. So a bit softer on euro, I would have thought, through the morning, a bit softer on sterling. But then if we get no action in terms of the announcements, you possibly see a partial reversal of those moves.
Were you surprised by, I guess, lack of any huge reaction over the past few weeks for the euro vis-a-vis Cyprus?
Yeah, I mean, slightly modest the move. I mean, we have moved from 135 to 128, if you like, if you think of it in that kind of context. But you're right. But I suspect what's actually happening is the market's taken some solace from the fact that the bond markets, the peripheral bond markets, have been reasonably well behaved through this. Yes, the banks have come under some pressure, but I think that's the euro move has been relatively modest. When you think that, you know, we have had softer eurozone data, I suspect that's actually been more the driver than the Cyprus issue. I think it's the fact that we're seeing that slowdown.
Are you less comforted by Mario Draghi and the ECB now than you were 6 months ago, or does that will do everything it takes?
I still think that works. Yeah, I still think that works. You know, because otherwise, if you'd had a situation like the Italian elections, you had a situation like Cyprus, you would have expected that kind of self-feeding bond market problem to re-emerge. It hasn't. You know, we've seen bond markets very well behaved in the periphery, and I think therefore that says, sorry, Draghi's still in play, the OMT is still in play in the background. It's still working, even though he's not had to use it yet, of course.